It is time now for Better Money with Joel Johnson, and today we're talking about tax planning strategies in retirement. Joel is a certified financial planner and managing partner at Johnson Brunetti. Thanks so much for being here.
Great to be back, Kara.
It's tax season. It's, for a lot of people, going to be the first time they really understand how the tax law changes are going to affect them. And specifically, if you're a retiree, there are things that you should be considering that can really reduce your tax burden.
Correct. One of the great things about being a retiree is you have much more control over where you're taking your income from. While you're working, all your income's coming from your employer typically, and you don't have a lot of control on how to manipulate your taxes in a good way, and you certainly do when you're retired.
Okay, so we're going to talk about some tax planning strategies. Number one, deductions and exemptions. Those are the things that, those line items that you're trying to itemize.
Right, and things are different this year. There will be some people that were itemizing deductions that are going to be better off not taking those itemizations, not even filing that form, because of the way things changed with the new tax law. There's a certain amount of money that you can now not even pay any taxes on, and it was different in years past. It's actually doubled. So a lot of people are not going to take that itemized deduction. They're just going to take the standard exemptions.
Okay, so that's something you want to talk to your tax planner about, because it may be different for you this year. And then number two, deferring retirement plan distributions. What do you mean by that?
Correct. So any money that's in a 401k or an IRA, when that money comes out, it's taxed as ordinary income. We don't have to pay Social Security on it, but it gets taxed as ordinary income. For some people, because the early years of retirement, they're going to be spending more money, they might want to defer that taxable income, pay less tax on your income early in retirement. So maybe you take your income from a brokerage account or even from a bank account, you begin to spend down that money, leave the distributions from your retirement plans alone until later on in your retirement when you might not be able to spend the money, might not be able to travel as much.
And when you do take it out, it'll come out at your tax rate. So if you're still working or something, that's not maybe the best time to do it.
Correct. We tell people if they're still working, if they can get by on that income that they're earning from their job, don't take out distributions. Typically, you want to forego distributions as long as possible. Okay. Unless you're wealthy, then there comes some special planning around those distributions.
Okay. Number three, you want to maximize your tax-free income.
That's correct. And I alluded to that a little bit before, where you could take money out of a bank account. If you've got a lot of money in a bank account, that money's already been taxed, leaving other money alone, again, creating tax-free income, because technically it's not income, you're spending down money you've already paid taxes on. But municipal bond funds or municipal bonds also create tax-free interest. And with interest rates going up, a lot of times people can get 3 or 4% tax-free. If you're in a higher income tax bracket, that's like getting maybe 5 or 6% taxable. Pretty nice interest rates.
Okay. And number four, you want to understand how retirement income is taxed. So it's different.
Correct. It's very different. We don't pay Social Security taxes on retirement income, but having too much money that we're paying taxes on can take away some of the exemptions and some of the deductions we have. So it's really important that a retiree or somebody even within 3 or 4 years of retirement takes a look with new eyes at where all their income is going to be coming from. They can't just go right into retirement on autopilot. They'll end up paying much more in taxes than they need to.
So what's step one if you're, you're concerned about these new changes? It could be beneficial to some people, but you want to sit down with your financial advisor, or it needs to be an accountant?
Well, sit down with somebody that's proactive. A lot of times, depending on whether it's an accountant or a financial advisor, they might just be looking at the past. We really need to get a handle on what's in the future. How can we minimize taxes for the rest of our lives? So absolutely, they should sit down with a certified financial planner, if that person specializes in retirees, or an accountant that will sit down and be proactive, come up with a tax plan for the next 10 or 15 years so we can minimize those taxes over our lifetime.
And you have something to get people thinking. It's a free offer for anyone who's watching. It's tax planning in today's economic environment, and that will be free to all of the viewers. You just have to go to bettermoneytv.com, and you'll be able to give all of the viewers this free offer. Yeah,
it's a great resource, and there's also additional resources that you can go online that are mentioned in here to get some real specific advice.
All right, some good advice and some good answers there. You want to get prepared. April is coming.
April's coming faster than we know.
All right. Thank you so much, Joel.